Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the past week's price action of the NASDAQ Composite Index. We'll kick off with the 4-hour chart here. We can see the market did manage to find support at this old cluster of support, old cloud chart support level. Managed to strongly rebound from that level, broke through the standard line of the cloud chart resistance there. Now testing resistance at the top end of that standard line there. There's upside potential back up to the top end of the cloud, just the first major resistance level on the 4-hour chart. But so far so good. We got a rebound from critical 13,138 support zone on the 4-hour. Managed to motor ahead, strong performance there. Now the upside resistance target is this top end cloud chart level as well as that cloud chart resistance level there. So these are the upside targets on the 4-hour. Ideally for the year end rally to be confirmed, we need price action above the top end of the cloud here. That will change the outlook from bearish to bullish on the Ichimoku cloud, the 4-hour Ichimoku cloud. In the last video, we were highlighting the seasonal weakness we were expecting in September. So due to seasonality, so that thesis did play itself out with seasonal weakness in September. Let's go and take a look at the daily Ichimoku cloud of the NASDAQ Composite. Very strong rebound there. You can see where that 4-hour cloud chart support level comes from. Is these old highs in May, which used to be a resistance zone, broke past that there back in May, beginning of June. So we rebounded from the May highs or the June lows, and those levels came back in as support. Now on the daily chart here, the first resistance level is the standard line of the cloud here at 13,556, and then the bottom end of the cloud here, that's the next resistance zone, and then the ultimate resistance zone is this top end cloud chart resistance zone. So these are the upside resistance targets in this current rally. Provided that the market stays above these lows, the year-end rally should be intact. So these are the upside resistance targets with these bottom end lows here as the support zone. But 13,138 is kind of a line in the sand here for critical support on the 4-hour as well. So market needs to remain above this level, but so far so good. The targets we're looking for this coming week's trading is the 13,556 upside resistance there, and then the bottom end of the cloud there together with the front end cloud chart resistance zone as well as that top end cloud chart resistance zone. Let's pop that line in there just to give that an idea. So if the market managed to grind higher over the next couple of weeks, break through the cloud, that will then confirm a new bull market on the daily Ichimoku cloud. Price action above the cloud is bullish, price action below the cloud is bearish. So we're not at the woods yet, but this is a short-term bear market rally, swing trade back up to the bottom end of the cloud here, and these are the resistance levels to keep an eye on. If we look at the weekly Ichimoku, we can see how those support levels came back into play. 13,138 there. 13,114 comes from that old cloud chart support level, as well as these old top end cloud chart resistance levels now acted as support, and we were very close to the front end of the cloud support level there. So this is a cloud charts support range between 3 different types cloud chart support levels on the weekly. So they were quite significant from a trading perspective, these critical cloud chart support levels. So this strong price action of last week, you can see quite a strong support zone there. So the upside resistance targets would be 13,803, and then once again this old high just around 14,200 and 14,400. So these are the upside resistance targets for the year-end rally up until end of December, when we might retest these resistance levels up here on the Ichimoku cloud, the weekly Ichimoku cloud. But so far, price action is still above the cloud, so that's bullish on the weekly Ichimoku. So keep that in mind. Support at the standard line here. You can see the length of the candlesticks there. Lots of support here at this cluster of support. There's basically 4 support levels here that's being tested. The front end of the cloud, there's 13,138 top end of the cloud there, as well as this 13,114, which used to be a significant support level back in the second quarter of 2022. So quite a significant support zone that we're rebounding from. So if support holds, then we'll go back up to 13,803 and then retest these old highs of 14.2 and 14.4 on the NASDAQ weekly Ichimoku cloud. Now, if we just step back and look at the market from a rally retracement point of view, Fibonacci retracement, we can see from this October low here when the market rally started up until this high, we've just a little bit over a 23% correction, just above the 38% one. You can see there that's also significant support zones there. So the market's pulling back a little bit. Healthy correction for this kind of type trend that we've seen. Very strong rally since the October low. Now consolidating some of that move. And as long as the retracement's above the 38% zone, that's quite healthy and that's quite normal for any kind of market, a 20% retracement. Fibonacci retracement more than 23% in this case from that low. Now if we're going to move this low to this one, yeah, and that high, we can see this is also 26 and 38, just a pinch between those two support zones. And you can see how this 38% retracement 12835 corresponds well with the bottom in the cloud there. So that's another support zone to keep in mind. So let's say this rally continues, going to run into trouble, test resistance at 13,556, then the bottom in the cloud, then going to attempt to break past the top end of the cloud. So we'll see if the year-end rally is strong enough to get past those levels, and then the next resistance targets after that would be the old top end cloud chart resistance level there. So those are the key levels to watch out for this kind of current move to the upside there. So these are the cloud chart resistance levels. This is still somewhat of a healthy correction from a Fibonacci point of view. Now if we move this low to this one there, okay. Now if we look at the March low and the rally from the March low up until the July high, and then the ensuing pullback, we can see this market's now testing the 38% Fibonacci retracement as a key support zone. And then Friday's price action, a very strong rally from that cluster of support zone there, which coincides well with this May-June support as we highlighted earlier. So these are the support targets, a nice healthy correction after a seasonal weak period in September. And if this rally lasts, then the upside targets are this cluster of resistance from an Ichimoku cloud chart perspective. Just one more point in terms of chart patterns, we can see a beautiful cup and handle pattern here. There's the cup and there's the handle there. So this is quite a favorable chart pattern in the market so far. So far so good. The year-end rally, if the support level holds here, we should see the old highs being tested in the old cloud chart resistance levels being tested in the year-end rally. But so far so good. Beautiful cup and handle chart pattern there, and maybe that's a sign of good things to come. Until next time, happy cloud chart trading. Bye for now.